Welcome to RANsquawk's EU morning briefing for Thursday, 4th of January 2010. Things have just opened here in London, all the markets now underway, and we're pretty flat in terms of fixed income and stock futures. Much of the anticipation, both in the Eurozone and in London, on the central bank decisions. Starting with the Bank of England first, it's due at midday, 12 o'clock, where the general consensus is that they will leave the rate on hold at 0.5% and also will keep the QE programme also, which is now finished, and they won't have any extension going forward. That is the consensus. However, there is a very slight chance of a possible 25 billion increase. The likes of the shadow MPC in the Times this morning, Anatol Koletsky, closely followed economics editor of the Times newspaper, did in fact go for 25 billion, but again the overall consensus is they will hold that programme, having now seen all those purchases of 200 billion completed. For the ECB, they're due shortly after 12:45. The rate not really a concern there, that's going to be held at the 1% level. The press conference, as per usual, is going to be the most interest, where Trichet will likely be grilled quite hard in regard to the Greek situation and obviously the most recent proposals that we've seen this week in regards to the EU backing that budget proposal. So that's the thing to look out there. But in terms of some things overnight that are worth just recapping, in terms of Asian news flow, we had China say they'll stick to a proactive fiscal policy this year with the aim of boosting domestic demand, according to their finance minister. Other news stories from Chinese press as well, commenting on loans, saying that Chinese banks extended more than 1.5 trillion yuan of new loans in January, according to unnamed sources. Elsewhere, having seen Bernanke yesterday get affirmed for his second term, he also said that the resumption of US economic growth encouraging, but unemployment too high and credit contracting. And elsewhere, head of non-farms tomorrow, the US Monster Employment Index for January came in at 114 against a previous 115. Other news flow in terms of foreign exchange overnight, bit of weakness in terms of the Kiwi currencies, where their unemployment rate for the fourth quarter came out a lot higher than expected and hit a 10-year high there at 7.3% on the Q&Q print. So again, Kiwi dollar trading lower at the European Open. In terms of the actual equity-specific news, it is worth noting for the financial sector, something covered in the FT in regards to Chinese banks. The Chinese regulators have imposed a partial ban on listed companies raising capital from equity markets to repay bank loans or replenish working capital amid general tightening of liquidity and official curbs on soaring bank debt in the country. In terms of a couple of trade updates as well out of the Eurozone, we've had the likes of Deutsche Bank and Santander, two of the biggest banks, report their general numbers for the fourth quarter on a net income basis, beating expectations. Their shares, though, trading broadly flat at the moment. In terms as well, after the market closed yesterday on Wall Street and US equities, we also had Cisco Systems report. Q2 adjusted EPS was at 40 cents, above the expected 35, with revenues also slightly stronger. They were trading up around 1.5% in extended trade yesterday. Looking forward then, as mentioned, things to come. We have the Bank of England rate decision, that's at 12 o'clock. The ECB rate decisions at 12:45, the press conference to follow at 1:30. And then in terms of US data today, we'll have the weekly jobless claims, and we'll also have factory orders a bit later on in the session.